The Dow traded lower today, but that was not indicative of any major selling. As you can see, it's still in this uptrend above the T-line. It kind of basically came back and tested the lows. But more importantly, you can see that they traded back up above where they opened, which told you there was buying after the open. That same scenario could be applied to the analysis of what was going on in the other indexes. Not only did they trade above their open, but all of them, or most of them, closed up above and traded positive for the day, which kind of continues to confirm that as long as we're above the T-line, the uptrend will remain in progress. And an additional factor was the big stocks that everybody's watching, like Apple, traded positive most of the day, even when the markets were down. Now again, logic says if everybody's bailing out of the market, there's a big sell going on, there's not going to be the stocks everybody watches are trading positive. We can see how effective the analysis of the T-line was on Apple. A gap up through the T-line after a piercing signal. A sell signal back to the T-line, but notice what happened once they got to the T-line. Doji, 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 basically telling us the T-line was acting as support. Get ready for the next uptrend. Amazon provided that same scenario. Again, a strong Morningstar type signal off the 50. And here's a simple lesson on how to use stop losses effectively when using candlestick analysis. Most money managers tell you to cut your losses short and let your profits run, but they never tell you how to cut your losses short and let your profits run. There's very simple techniques. For example, you're in the overbought area, you're at the uptrend, but look how far away you've moved from the T-line. Very simple rule. Put a safety stop at the previous day's open, because logic says if the sellers have enough control to bring it down through that level, more than likely they're bringing it back to the T-line. The T-line is an extremely effective natural support and resistance level of human nature. As a matter of fact, on April 27th and 28th, we will be doing a 2-day training on all the elements of using the T-line to not only put you in the right direction, but put you in positions where the strength of that new trend is going to be extremely strong, much better than just merely uptrending stocks in an uptrending market. As we saw today, Amazon held pretty flat, and it was trading positive when the market was lower, also giving us a good indication that they weren't selling this market off. So no matter what the market direction, whether it's down, flat, or up, if you analyze specific commodities like crude oil, you can see the crude oil price is moving up steadily from the $45 range. Right now we're close to $64.50, still trading an uptrend. This makes for very easy analysis of what sectors might be looked at. For example, whiting, breaking out through the 50 on some good bullish patterns. At least we are alerted to be watching the oil stocks because of the oil prices. Candlestick signals allow us to take advantage of the exact times to be getting into a position based upon identifying patterns, like a wedge pattern, as we can see in SGEN. On Friday, notice the doji followed by the gap up. That's your best friend. And notice what it did. It broke out through this level. This was a 25-point move to get up to this level. Means there's a potential of a 25-point move to the upside. Will it get there? Who knows? But that would be the assessment, and that allows a candlestick investor to create trading strategies, whether buying a stock, buying calls, buying call spreads, allowing you to maximize your profitability based upon knowing the direction and the magnitude of the new direction. And that same scenario can be applied to when to be out of a trade. We were watching Papa John's, PZZA. Notice the big fry pan bottom. Notice the strong price move. What were we expecting? A J-hook pattern, which would have told us that this wave right here would have been the same magnitude as this wave right here. But today's trading showed us that that trajectory was gone. It wasn't a J-hook pattern. Close out the position. So the sage advice that we hear from a lot of money managers that tell you cut your losses short and let your profits run. The only problem is they never tell you how to cut your losses short and let your profits run. Candlestick analysis makes that very easy. This is the type of thing we were going to be teaching in our T-line training on April 27th and 28th. How to use this information effectively for dramatically improving your profitability. That'll be it. We'll see you in the chat rooms.